Hello traders, Gary Wagner here. It is 12:10 in Honolulu, 6:10 in New York on Tuesday, 7th day of May, 2024, and this is the evening report for gold and silver. Gold is trading approximately 30 cents lower, fixed at $2,323.90 after giving up $7 in New York and Globex. When we look at the percentage decline today, gold was down 0.30%. When we compare that to the dollar index today, the dollar gained 0.29%, almost exactly the percentage gain in the dollar is equivalent to the percentage decline in gold. The dollar index is currently fixed at 105.26. The same cannot be said for silver, with silver giving up 0.74%. That means that roughly two-thirds of today's decline in silver was prompted by selling pressure by market participants. Silver lost 20 cents in trading today, and the July contract is currently fixed at $27.48. We have been talking about gold futures and the fact that we can identify one bull flag and potentially another one forming right now. After hitting the apex, the all-time record high at approximately 24.48, we have seen gold have a bias to the downside. We have a basic fib retracement from the lows in October at $1,885 up to the record high. Gold is sitting just above the 23.6% fib retracement at 23.24. And if gold can hold this level, we could see a spark higher. In terms of acting upon a trade, I do believe we could see further downside. The only thing that would change my mind is a hard break above this resistance line that forms the upper line of the bull flag formation. However, we could invalidate this and break to the downside. If that happens, we would have a very likely chance that gold could trade near 2,200 at $2,233, the 38.2% fib retracement. The reason I believe $2,233 could be a major level of support is once gold broke above this price point, you can see that over the next 3 or 4 trading days, it went sharply higher from $2,214 up to $2,323 with these small bodied candles that gapped above the prior closing price. Until we get confirmation as to whether or not gold has now hit the upper level resistance and will trade back down to the support line, a strong break above the upper level resistance line would change that outlook. Therefore, we will remain neutral with no active positions in gold. Silver has had an interesting move. Looking back, about mid-February, silver was trading to a low of about $22.48. Within a couple of months, it moved up to the most recent high, just above $30. From there, we would see a new high, and then silver would trade sideways and then break hard to the downside. This particular move here took silver 5% lower. That was followed by sideways trading action. And recently, about a week ago, it once again broke hard to the downside. You look at these lows that came in following the break to the downside, they were roughly just above or just below the 50% retracement at 26.33. Yesterday, we had a sizable move, taking silver back above the 38.2% fib retracement at 27.24, and today silver sold moderately lower. The question is whether or not silver can hold the tentative support at 27.25 if we round it up, or if it will once again break below. One thing we can say is that the 50% retracement coupled with the 50-day simple moving average provided absolute support during this downtrend. Silver needs to trade above that if we're going to see any upward momentum. But right now, I'm wondering whether or not 27.25 as a price point will hold and become a more stable level of support. We are still sidelined until we determine if the selling pressure has concluded. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.